Hi, and welcome to a weekly review of the technicals and fundamental data that is due out this week. In fact, what I'm going to do this week is just run through the fundamental data first and just run through the sort of key numbers that I'll be looking for, key speakers this week. And I'm starting off on Tuesday. There's very little out today. We've got Swiss National Bank speakers later on this evening, which, if I was to do anything to do with, I'm just looking, due to speak about monetary policy and negative interest rates in the University of Brazil. Okay, so not going to be a mover to the major markets. So looking at the major markets and the data coming out for them, really, we've got Carney speaking at 3:35. Actually, sorry, tomorrow we've got the at 3 o'clock we've got consumer confidence. Not a big mover, so not a lot to worry about there. Carney is going to be testifying in front of the House of Lords Economic Affairs Committee on the Brexit vote and the consequences of such. Maybe some volatility in the markets there, but I don't think it's going to be led one way or the other because it's all down to what's happened as opposed to what's talked about. ECB President speaking in at 4:30 tomorrow. Due to speak about stability, equity, and monetary policy at the German Institute for Economic Research. There'll be people listening out for any clues of whether they're going to extend the financial easing following the next meeting, because at the moment it's sort of left us in, as I said last week, it was more what they didn't say rather than what they did say. So there's a lot of questions coming in there, but it's expected they will continue with the financial easing, which could put pressure on the euro. Bearing in mind the US dollar is more likely to see, well, the US is more likely to see an interest rate increase. So there's a divergence of ways. Okay, Wednesday CPI for the Aussie dollar could get some volatility at 130 most likely. Often see volatility around that inflation figure. Thereafter, not much as new home sales, crude inventories on the Wednesday, nothing significant there. But we do move into significant come 9:30 Thursday morning. We've got the GDP figures for the UK, and then moving into the afternoon, we've got core durable goods orders in the US. So a couple of big figures there, particularly the first one for the GDP for UK. I think we could get quite a lot of volatility around that, particularly if it comes, I mean, it's expected to come in at 0.3 versus 0.6 last time, which actually that 0.6 was raised to 0.7, so it's already been increased, the figure between then and now, but they're expecting a figure of 0.3. Now if that comes in significantly better or significantly worse, we could see quite a big movement in the pound. So real big figure for the week. 1:30, we've got, as I said, we've got core durable goods on Thursday, then little else until we get into Friday afternoon, and we've got the advanced GDP. So we've got the US, the first GDP numbers for the US as well. So these prelim in the UK, advance in the US, they're really key numbers to be watching, and there'll be all eyes sitting there on the advanced GDP for the US on Friday. So some decent figures, but let's have a look at the general drift at the moment. As I said earlier, is a dollar up and many other currencies down. Now there'll be certain things that will be waiting on currencies such as the euro, and we saw the euro effectively sell off last week following a very lackluster performance or reply or comments from the ECB, and that could weight on the euro more. Technically, we met the expected range from that wedge to the downside. That's been fulfilled, but then you just then start looking around key pivotal areas, and I'm looking at that 0830 sort of zone, which was the previous lows here, and here. It provided support sort of around for quite a bit in between. Now, basically, that it's found support around that area in the past. May be quite, as I say, it's a pivotal area, because if it breaks it, then I would be certainly looking on the sell side more, and I would also be looking at any retracement into that area as a possible shorting area. So that's what I'm looking at the moment. So at the moment, still erring on the bearish side. Now there's some intraday stuff that may be showing us other means at the moment, but I have to remain bearish in the bigger picture here. So we're already out the monthly S3. The pivots were pinched on the month, so it's probably not a massive surprise. We had very little movement over the last couple of months through the euro. It's seen more of a trend. It's in a proper trend here. Retracements back to the daily eights could provide selling points as well. So even if we do get sort of intraday rallies, I'd be looking more for the downside with the trend that's fixed there. Not particularly oversold in any factor. Let's just check. We did get oversold in sort of spiky sort of moments, but nothing of significance, and it came out of a choppy area. So still expecting further downside. Taking a look at the pound, then let's look at the big picture first, and really just providing us with a bit of a wedge still. Yes, last week we did see that sort of inverted hammer that's sitting there, but it is within the range of the previous week's bar. It's not looking overly bullish, especially when you come down to the dailies here. And it's, if anything, I'm almost expecting a break of that lower trend line. There's this sort of trend on that. It is bear flag territory in terms of what we're looking at here. Yes, it is outside the S3, and maybe with a slightly wider range we saw on cable, it could end up the month inside the S3 and pull back to that regression trend line at some point. It got oversold way back at the earlier part of the month. Has not really recovered too well from it. So at the moment, I think, well, obviously the figures coming out later in the week, the GDP figure may give us a little bit more bearing for the short-term time frames, but at the moment I'm remaining erring on the bearish side from the big picture. Dollar yen. Whoops, wrong page. Let's go right the way down there. Now, the dollar yen was a funny one. Last week, I was still looking at the bullish side. It put a pivot swing in. It triggered that pivot swing and pushed up. Up till last week when I was recording this on the Monday. Seeing the week finish, we've ended up with this sort of hanging man candle at the highs there. I'm still looking, if it gets back above that weekly 34, really it's got to be to the bullish side. I did see some weakening signs on the dailies, though. We saw this divergence occurring on the dailies, which at one point last week really looked like it was going to sell and continue pushing back maybe towards the 50s, etc. But at the moment, there's no real sign of that. And if now, from what I'm seeing, with the risk, that was a bit of risk on last week, and the risk is off again, and it may just sort of, with the other currencies weakening and, as I say, potential dollar strength, any comments coming from the US positive, we'll see this dollar yen pushing upwards. So potential upside then, erring back towards the upside. Okay. Aussie dollar inflation out this week, it really needs something to give it a bit of a kickstart. From a weekly perspective, it still sits very much in this wedge. It tried breaking the wedge last week, but never really managed to successfully do so. There's been a trend across those highs there we've been looking at for a long time. Close above that would make me much more bullish. In the bigger scheme of things, when you look at this, it's in a wedge. It's in a bit of a rising weight sort of pattern as well, the higher lows. Some of the highs now are being challenged a little bit, so there could be a slight towards the upside break of this. It's certainly from way back. In fact, let me just draw this on there. You've got this sort of low here and this low here. And it's still working off that higher low, not confirmed higher low until it breaks this level, but it's still, we can see it's a higher low. Now, so the is for the Aussie is more to the upside there, but again, we've got this emphasis on the stronger US dollar, and it may just stifle it. So whilst there may be sort of respectable signs in some of the data coming from Australia, the US dollar is just restraining it probably a bit too much. Commodities improving slightly in terms of price, etc., but it's just not filtering through properly yet. Looking through to the dailies, and well, as I said, there's the break last week we saw late on. It sold off the very next day with a bearish engulfing reversal candle here, and it sort of ended up as a pivot swing candle. And if we break the Friday's lows here, that really confirms it. At the moment, it's just not playing ball, and I think this is this part of what we're seeing, just chopping through a reasonably strongish or a comfortable economy, a relatively comfortable economy when you look at them compared to others, versus a US economy which is most likely you're going to see an interest rate sooner rather than later, and there's this sort of agreement across most parties in the US at the moment, it seems, for that. So until anything changes there, I think the US, the Aussie dollar, stroke US dollar, is going to end up being much more in a chop, and it makes for me difficult to try and pick the trends. Okay, and finally the Canadian dollar. You know what I'm going to do here, of course. I'm going to look at the price of oil and just show you the price of oil and how that's moved back up, and it's sitting there at the moment comfortably above $50 a barrel, but it wobbled a little bit last week as it got back up to those previous highs, but very small ranges at the moment. It seems to be there's some sort of agreement, and it's worked that agreement into the price, and it's very fickle oil. We could see big days down, big days up, but at the moment it's much more in a more consolidated pattern. Certainly there are risks to the downside in oil, but at the moment, no. As I said before, I switched back and I want to look at the Canadian dollar now, not the oil price in the lower time frame. There we go, Canadian dollar. And what we've seen here is a weakening of the Canadian dollar. Now, this is partially due to economic reasons and the lower expectations, so that's really worked out there versus the US dollar. Oil's been wiped out. The benefits in oil, as I say, is not really being shown through here, and the only way we'd probably see that now is if we see some decent economic data coming out of Canada, which certainly doesn't seem to be the case at the moment. It's quite pessimistic. So with that in mind, I've got to err towards the upside, and this pattern's still riding to the upside. Obviously become much more bearish when it starts breaking this trend line that's sort of sitting there, but at the moment weekly still pushing up there. Now it's already today, yesterday, being Friday, has pushed up there, and today is even pushed up at another high. Intraday, I think we will see a lot of chop. Much the same as we've seen over the last week or so, or month even. We've seen quite a lot of chop in the majority of the time, but there was a decent pivot swing into Friday. Friday saw that pushing up, and well, as I say, to me the trend still looks like towards the upside. There was some sort of signals of overbought, oversold, or overbought for the US dollar, but in the short time frames that's mainly worked off, and as I say, for me, it still looks like the easiest route at the moment for the Canadian dollar is to the upside. Right, that pretty sums that up. Let's just have a look at a couple of the indices, and we'll have a look at the S&Ps. Let's just run down and see what's happening there. So the S&Ps failed, made a lower current fixed lower high by breaking the previous low there, but having a little bounce up this morning at the moment in today's trading. Looking at the picture here, though, it's for me to be bullish on these indices. I really need to see the break of the high here. Otherwise, it's got to be staying with the bearish sort of influence. Looking at the the FTSE even. Just run through the FTSE, if only I could say it, the FTSE. Now the FTSE on a weekly point of view has been sitting there spinning top a couple of weeks ago. Last week it sort of put this little doji stroke hammerish sort of pattern in there. We would generally expect with the weakening of the pound some probably more upside on the FTSE, but it's stalling here a little bit. It would appear on these last couple of weeks it's not really showing massive more growth or anything there, so you've got to look at it in the shorter time frame, and there was certainly a divergence way back on the 11th of October, and that's probably still in play in a sense. It's not pushed up back and tested that sort of area again, and if you look at all the days since, much tighter ranges. Now, as I say, we've got data coming out this week which may give that a bit more of a shocker if we see any significant moves in the GDP figures, etc. So that's pretty much it for me for the week ahead. I would suggest you just keep an eye on the daily updates. Aside of that, have a great one. Bye for now.